Good morning, UTG. Good morning to those watching along. Good morning to those who will watch this later. Welcome to the Wednesday morning update. Hopefully it's Wednesday. Is it Wednesday? It's Wednesday. Okay. Thank you for all who tuned in last night on our update. It was 7:30 last night, and we did an Ichimoku masterclass alongside that as well. So very, very good turnout. A lot of views coming through on YouTube. Thank you for all that. If you guys haven't checked it out, it is on our YouTube channel. It is on the Discord as well. Give that video a like and subscribe to the channel if you haven't already. It does help us out a lot. Moving on to BTC, I'll throw the header on. We didn't have it on last night, but I'll throw it on this morning. So BTC USD, we spoke about this last night, and I did speak about this in our update on TradingView. I did speak about this in our live last night also, where we were teetering around this 38.2, and the next level that I was really interested in was the 50. And obviously you can see that line of liquidity just on the left there, and goes all the way across to roughly around the 28th of July, where we had some of those bounces, some of those respected supports there as well. And I'm sure it goes much further back than that. But it was a very nice reaction off that 50 fibs, and a decent wick down and close. So not a bad thing for BTC at the moment, and really highlights how good Steamroller is, to be completely honest with you. Absolutely incredible indicator. And you can see the accuracy of Steamroller along the way, especially on this 4-hour time frame, where we've got this top here at 12. Steamroller gave us the goods on that one. We've got this bottom here at around 9.9, 9.6 roughly. Steamroller gave us the goods on that. And then we've got this rejection off the 50 at about 11 or 10.950. And again, Steamroller called that as well. So a very good testament to how good Steamroller is. From here though, however, on BTC, do I think it's going to continue to the 6-1? Well, that remains to be seen. We actually haven't really made enough structure here on the 4-hour time frame, just looking at this, to really tell us that we're going to the 50. Some of the indicators say we are topped out at the moment. Obviously, Steamroller, as we just mentioned, is topped out. CCI is giving us a bit of a bearish divergence here now with this double top scenario, and RSI's just kissed the 70 line and is starting to turn down. More than likely, this event will be judged on its own. And what I mean by that is we'll have to draw fibs from swing low to high and really gauge some of the other fib levels that we're talking about. So the 23, the 38, the 50 and the 61. More than likely, if BTC is going to continue, it's going to have to respect some of these levels here on the right-hand side, looking at this move on its own without, taking into consideration the entire move. So yeah, I'd be looking for this 38.2 retrace at 10.522 to really gauge this market and see if we're going to continue. 10.522 or that 38.2 level really coincides with I'll get rid of that. Really coincides with a lot of the liquidity that we've formed around this level, around this zone here that we spoke about last night from around 11 to 9.9. If we don't hold that 38.2, there is one last line of defense, coming down to this demand level, and even some so you can even throw in some more supports there, I guess, to really have a look at. But this last line of defense will be that 10,000 demand. And pending that, we could see what Ty described last night on our live. We could see, anywhere between 9.6, even 8.8, stuff like that on the macro scale of things, not on the 4 hour. I'm talking higher time frame. Obviously, on the macro side of things, if we look at the daily time frame, we are still, below the mean. We are making, if that was the top of that move, we are making another lower high, and we can expect some more further downsides if we're looking at the macro side of things. But however, the macro side of things is diminishing in volume, and we're not getting a lot of decent candle structure in either direction. We're really just walking. If we're looking at the macro, we're really just walking to the right. I know we've had some moves, from 9 to about 10.9, which is fine. It was about a $900 swing or a $1,000 swing, but it's taken the 3rd to the 16th, it's taken 13 days, nearly 2 weeks to get to do this structure alone. So we're not really doing much on the macro side of things. The market's really just waiting for a break, a decent size break in either direction. So that's why I'm really focusing on the 4 hour and the midterm time frame, because that's what's really giving us some content and some value in terms of trades and stuff to talk about. So 50, and looking back at that 38.2 where I drew in previously, 10.5 would be that area, that golden level for a pullback. You could even move it up a little bit higher if you want to coincide with these tops at 10.570. But roughly around there would be a decent area for a pullback in terms of making a lower high and then continuing up to that supply at 11 to 20 if we wanted to continue this move. That's going to be a big one. 10.5, that psychological round number is going to be a big one to really hold. If the bears do take control of this and we move back down under 10.5, I could probably say that we'll revisit 10 and then make our overall macro scale decision on this market around there. But enough about BTC. We'll move on to ETH USD. Excuse me. And I'll change over the header so we can do some of that, some of those timestamps later on. ETH really leading the charge on BTC. It's really giving us a first glance look at what's going to happen with BTC on ETH, because it's happening a little bit sooner and there's a lot less volume. So it's a lot easier to move the price at the moment on ETH. So this 378.62 was what I identified in terms of a Fibonacci level a little while ago, and that really coincided with our level of supply that we amended last night during our live session. And that's been held twice now very, very nicely. And we haven't really cleared away any of the liquidity at that level, and that 400 level is still quite strong as a round number psychological resistance. And that coincides obviously with our supply, so that's looking very nice. If we had to draw in a midterm, short-term, low-quality level for ETH, it would be at that 357, okay, where we see that pause in the market where we've been respected multiple times now. And this is the same sort of scenario with ETH as it is with BTC, where we've got this level here at 340, 350, 355 If we do break below this level of demand, then you can expect it to come down to the bottom one at 320, because this is how obviously the supply and demand works. We've got a short-term demand zone that's formed alongside, the tops or the top area of this liquidity on the left-hand side. So that coincides nicely, and that candle there forms that zone and gives us a perfect area for it. And then we've got these two or these three respected candles to the right-hand side. So this level is quite significant in the way of price action on this smaller time frame, and considering the lower volume, it is significant. If we break below this over the next coming days, towards Friday into the weekend, then we can probably safely say we'll head back down towards that 330, 320 mark for ETH. And in this space, I'd probably expect ETH to move first, which it has with BTC, against BTC, as we just saw, and as we have been seeing over the last couple of days, last couple of weeks, ETH has been moving first before BTC. So always look at ETH USD, even if you don't trade it. It'll give you sort of a first glance at what you could expect with BTC. The next one I have a look at to conclude I'll actually have a look at two. DXY. This will conclude our stream. DXY is a regulated market. This is not financial advice. These are all ideas and opinions that we have here at UTG. This is not financial advice. With the DXY, it actually did the opposite what I was thinking it was going to do last night. Last night we were trending towards that 50 zone and where that wick down was. And we actually moved in the opposite direction. So happy to be wrong. Happy to take it on the chin. Absolutely. I'll just change the header there. We are moving towards that 23.6. There's no volume indicator for the DXY. However, you could probably see by the candle structure there isn't a whole lot of it. A lot of this candle structure is just reacting to what the other pairs are doing, like Euro, gold, and silver, and a lot of the other major pairs, but there's not a lot of volume in this chart. You can see by the candle structure they are quite sporadic at times, although not right now, but at times they have been. We are moving towards that 23.6, and I'm looking for this level to be held, honestly. There is quite a lot of liquidity to the left-hand side. We have made a whole lot of ground within that area of 92.93 to all the way up to about 94. So there is a lot of liquidity to get through. 23.6 looks like it might be held over the course of today, but we'll have to wait and see what the volume brings in for tonight's session. And if we push through higher, there is a whole lot of liquidity to get through. 23.6 looks like it might be held over the course of today into tonight. So we'll see what happens with that. One thing I wanted to have a quick look at before we go is the All Ords. The All Ords we've been following on the daily. We have bounced off this. I noticed this morning we have bounced off this this level of demand here, and it is short term. Given it is very short term, and it is a 4-hour level. If you had to, really gauge where the All Ords is going to be headed, we'll have a look at some fibs. So if we draw from swing high to swing low, you can see pretty much immediately that the fibs are respected quite nicely. We've got the 78.6, we've got our 50, we've got our 38 as well, respected some of these candles in the center. So we are heading towards that 23.6. You could probably expect it to get the 23.6 or the 38.2 before a continuation down and retest that level of demand again. So just give that some thought. We are continuing our lower high descent and continuing that structure. The candlestick or the candle structure is quite sporadic also with the DXY, obviously. The All Ords. It is measured really more so on the daily, but we can draw in some of these levels on the 4-hour to really just gauge where we can expect it to get to and where we can expect it to form its continuation or its top for this relief before a move down. But that concludes our morning update for Wednesday. If you haven't already, like and subscribe to the channel, and we will see you tomorrow night. Catch us later.